Boom, we are live. Here we go, right now. This is it. Everyone, boom, I hope you are ready. We are live. This is Tio and the Arcane Bear. Another beautiful day in the markets and another beautiful day in the jungle. I hope you are enjoying yourselves wherever you happen to be in the world. Yes, patience pays off. And the Market Whisperer is here again today to share our thoughts with you guys. I think it is always important to consistently go over this study for multiple reasons, and the main point being is because you can learn an enormous amount. Now, patience will pay off in the long run for those who do that study, who take that time to read their books or listen to Audible. I guess it's another great way to go. One of the important parts here, though, is to remember that during this process, one of the things that will be to your biggest advantage is if you go out there and you put in the work. That's with any sector. So we're going to dive in. We're going to be taking a look at Bitcoin, and here is the 4 hour. Now, this is the chart that we've been following for probably longer than I want it to be now. You'd always hope something exciting would change, although the last week has been extremely exciting with GameStop. We had basically a tweet by Elon Musk liquidate hundreds of millions of dollars in shorts, which we're actually going to post up in the background here and take a look at as well. So because we've been following pretty much the same trend line and horizontal trading range for quite some time, in the private group, there had been some conjecture. And one of the other ideas here that I thought was quite potent and potential as well, we're going to go over right now. So for those of you that don't know, this is, well, actually it might even look a little better on the 4 hour here. So take a look at the 4 hour. So there's something called a bull flag. Now a bull flag, it doesn't have all the beautiful characteristics that we would want in a bull flag, but it would look something like this, approximately. Come down from the back of the trading range and go like this. So what's interesting about the bull flag, well, for two things. Number one, to point out primarily that, at least in the study here, that trading ranges don't always have to be horizontal. So here are the previous trading ranges of our trade analysis, and some of these we got into leverage trades out, in and out, which was nice. But again, you can see the drastic change in character between our previous very thin, very tight trading ranges between the 19, the 23, and the $25,000 area before this giant explosion. But you can also have trading ranges that perform horizontally. So you still have your primary support, your buying climax, your first shakeout, your automatic rally, a secondary test, your bump up against resistance. So part of the question is this actually a bull flag version of this trading range? And it's a really great question. Now, again, we generally want to default to horizontal trading ranges. For any of you who have been studying Wyckoff long enough, we are already in a trending market. So the reason why this trading range is important to understand the potential of is because of this much longer story that we've been in. So first off, anyone who missed the beginning of the bull market, you will recognize this chart, you won't recognize this chart, but this is a chart we have created and have not deviated from since March. In the beginning of March, middle of March, and then when the pandemic started, we had our first primary trading range here, our big breakout here where Michael Saylor purchased $1 billion in Bitcoin, our first two trading ranges, and then this massive explosion. Each one of these stair-stepped up perfectly to the top of the regression line before we started to create a much bigger accumulation. Now, one of the things that we have said multiple times, probably since 2018, and very specifically this automatic rally here, first off is to recognize that this automatic rally was the start of the multi-year accumulation range, and it's vastly different than where we're at today. First, let's note that. The second thing that's important to note is that during that period of that automatic rally, I had said multiple times that one of the things I would like to see, and that I believed would be very, very nice to see, is a return to the 21-week moving average. Now, I haven't turned these on in quite some time, but if we turn on our 3 moving average, we can see that the 21-week moving average is way down here, currently locked in around 18,000. So the reason why this was an important area for us, and we're making conjecture about it today, is do we maybe see an extension of that bull flag downwards of that area? I had said, and I still hope that we do to some degree see that, right? It would be great to see it. And this is why we've made that conjecture, because back in 2019, August 2019, right here, this area of the primary automatic rally, I had said I didn't think this was the start of the bull market because we just didn't see any retest of the 21-week moving average. Whereas here, when we first started our YouTube channel, back in March of 2017, right here, this is pretty much where we started, right around $600, I believe. I started screaming because I was like, guys, we have stayed above the 21-week moving average, and we just touched it again. You can go back and watch some of those videos. They're 3 years old now, but they're still there. This area where we kept retouching, especially with these wicks here, this 21-week moving average, and it's a little clearer with log chart too, so we will look at that as well. Remember, guys, the logarithmic chart shows more of a change in character, or a change of character over time. So when we're charting more linearly, it's only that log is more valuable for like these big time horizons. So here again, you can see this. Boom, 21-week moving average. Boom, 21-week moving average. Boom, 21-week moving average. 21-week moving average. 21-week moving average. And we did that all the way up until the bull market broke effectively at $20,000. We hit the 21, we came below it, and then that was basically the time to close your positions, was at the 21-week moving average. So the fact that we haven't seen that is a little disconcerting, because I've said, and I stand by this conjecture, that that's the sign of a really healthy bull market. So am I saying that we're in an unhealthy bull market? Well, yeah, kind of. It's very, very possible. And what's interesting is for the first time on the weekly, we're actually getting, again, so I try to argue against myself, right? Because I believe we're still ultimately very bullish, but we could see a bull flag that takes us downwards of $19,000. Now, this is the best conjecture I've seen to this day about the alternative potential here, which is that what you see or will see is actually this downwards trending bull flag, which again is actually a bullish signal, right? But it's it could be here to try to wash people out. So if we scroll back here, you can actually see that the point of control for this chart is sitting around 19,000, which is where the weekly average was. So we're on the 4 hour at the moment. So it would be something like this. It would be, here's your primary support, your first test, secondary test. This would be another test, and then you'd have a spring that jumped back down below, touched 19,000, and then broke out above the box around 35 and then kept going. This is a very real possibility. This is the best secondary conjecture I've seen so far, so I want to give a hats off to the private bear members for bringing it up. Again, we want to generally default to the horizontal trading ranges when we're going through our study, much as we have here. But and again, we haven't actually invalidated where I was looking at as well. I still think personally we're just going to run into resistance here and form a horizontal trading range, not a bull flag. But this is a great conjecture. And we always kind of want to learn how to argue and debate and like really put your beliefs on the line. If you bring something to the table and you believe that it's true, you better be willing to argue for it, like to the end of the day. Because if you're not, you don't really believe it. And in the markets, you kind of need to have confidence in what you're doing. When I was buying Bitcoin at $400, saying, hey, we're going to 10,000, I looked like an idiot. Well, so much from looking like an idiot. Now it was the genius move. But that's one of the great difficulties in being confident about something. You need to be able to argue your point to the end of the day. If you can't do that, it probably burns under the fire. This is the second best conjecture I have seen for the potential of what this trading range is doing. And as you can see, we have obeyed this horizontal trading range quite well as this bull flag as well. So normally we don't follow pattern trades too often, something like a bull flag, an inverse head and shoulders, although we do use them, especially when they are noticeable within inside the box that we are already trading. Very important to recognize this. So does that mean that this is invalidated? No, but it does mean we have a very, very high potential for secondary opportunity of lower accumulation range. It also means that if you bought at 40K, you don't really want to panic sell just to be able to buy back in, because you'll probably miss it. Because you'll be like, oh, I think it's going to 19, and then really it only goes to 23, and then you miss it, and then jumps back up to 35 in the course of like 12 hours, and then you're screwed. If you're new to investing, don't try to catch these changes in the market as much as just learn from them. It's like one of the most important things that you can do. I am still accumulating Bitcoin and Ethereum for this exact reason, And I think that one of the best things you can do is to reiterate a trade mentality to yourself that goes over this type of thesis, because at the end of the day, some of the best investors are dead. Now, tomorrow's episode is actually going to be called Some of the Best Investors Are Dead, where we go over more content around why people who trade often fail. And even Jesse Livermore, one of our favorites, he says the big money is made by sitting, not trading, not moving in and out of these little market positions. We are in a bull market still. Now, there's an enormous amount of money that can be made when you go back and you look at the potential of these previous horizontal trading ranges. I had a trade here which almost made $250,000 if I just executed it a bit more effectively. Now that's a different story. Speculators and investors are drastically different. I don't even look at them as the same. They're basically a bet in comparison, and they're extremely risky, and they should only be done by the best of the best, because all you're going to do is lose money if you're not good at it, and you're going to end up chasing your tail like a poor little dragon. So I don't suggest it. Now, if you're good at it, on the other hand, totally different story. Now, one of the other important parts here that we could make an argument for this horizontal or this bull flag trading range instead of the horizontal is the amount of supply that it took to get the price up. Now, often when we're looking for our UTAD test, or kind of like an upthrust, we're looking for a lot of supply to come in and kind of very little action. And if you measure, well, actually, no, that's not entirely true. We don't really have a great version of it here. Even these smaller gaps, like here, we actually saw a fair amount of price spread come in. So there's no easy conjecture here. And this could be we talk about blips in the system and news and what creates what. Elon Musk talking about Bitcoin, this changes a lot of people's interest in Bitcoin as well. So we could make an argument that this upthrust is kind of an anomaly to some degree or another. But it fits our primary horizontal trading range quite nicely. And as a matter of fact, if you can continue down that line, it fits it almost perfectly. We jumped right up against the previous area of resistance. We've come back into a massive area of support, which is now building between 34,000. If we start to break below the POC line, guys, and more importantly, break below the trading range and close below the trading range, this is the thesis, and we're coming down to $19,000 or $20,000. Until I see a change in the horizontal trading range character, I'm not even worried about it. And even at that point, it's just going to represent the potential to build the long positions even further, which just means I'm going to continue buying when I can. We are early in this bull market, and that can be proven in a number of great ways. There's a lot of stuff exploding right now. You could take a look at a link, AAVE in Uniswap today. Shout out to Blue for the 1-inch post that he made in the private group as well. I really like that. Again, guys, I think it's important to be able to debate and argue. Buddha, this is like he literally, this is the Sadra Mudra, which basically to him meant the great argument or the great debate. The Jewish history has a great culture of being able to argue till the sun goes down. And there's an important reason for it. Is because if what you believe is true, you better be fucking willing to stand up for it. Because if you aren't, then it's probably not true. Now, that's not always the case. People died for being right about the Earth being round and being at the center of the center of the solar, not the center of the solar system or the center of the universe. So just because you're convicted, just because you have conviction, doesn't always mean you're right either. But it's important to at least bring conviction to the table and try to argue your ideas, because otherwise you're just holding paper, and that's where like most of dogma comes from. Anyways, okay, into Ethereum. Why am I on the 5-minute? That's a great question, Tio. Okay, so here is the Ethereum chart that we've been following for quite some time. I still believe that we are ultimately bullish here, and we can look at that for a number of ways. Number one, AAVE. It acts absolutely out of look how beautiful AAVE's respect of the horizontal trading range has been. Boom, 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 boom. Spring, bam, another breakout. Boom, another breakout. And again, someone in the private group, Rasher, was like, "Oh, look, it's like a rising wedge. Is it bearish?" I'm like, "No, because it's just going to be the backup." We need to be careful to recognize, to look at pattern trades here and confuse them right? Because this is a rising wedge, yeah. But look, it was only went down to the backup phase before breaking out even higher. It's not even worth taking a position to the negative side. So it's important to remember to do your studies, guys, about the horizontal trading ranges and basically ignore all the people that talk about rising wedges, shoulders, cup and handle, unless we see them building within our trading range. And that does happen. It happens actually quite frequently. But when you're in a trending bull market in the early stages of it, it's just best to stay bullish. Okay, so back to Ethereum here. And the reason why, again, I was comparing Ethereum and AAVE is because AAVE runs on top of Ethereum. Now, if you guys would like, and I suggest you do so, rip over to Twitter and follow the Arcane Bear. As you can see, we actually posted our podcast with Stani from AAVE today. You just can click on the YouTube channel, but here's a quick little teaser from that as well. So go ahead and follow us on Twitter, and remember to like, share, and do everything else on YouTube as well. So I think that what we saw was the final the final LPS before we see a big SOS around 17 to maybe even as high as $2,000 here. We have managed to stay, especially as we zoom in closer here, in above the point of control, which is bullish to me, right? So I'm ultimately bullish. I'm in a long position for Ethereum still. I entered it yesterday. I was a little late on this one because I was traveling, but I got in around here around 1320. The previous evening, 1330, 1340. I took a few slow entries there. Anyways, the point of this, still everything looks good to me. Again, the only potential downside barrier we have here is if we follow this bull flag for Bitcoin down to $20,000. That's again a great conjecture there. I really appreciate you guys bringing that to the table in the private group. Okay, so Link has been outside of its box already. We saw its primary SOS, which we're seeing here, and a secondary spring here. You can kind of see this as we move in on the 4-hour a little bit more clearly. Here would be your spring. Here's the top of the SOS. And now we're seeing the backup phase. And again, guys, notice how, at least as we get closer, we've been staying above the point of control. Link, to me, looks like it's in like just about to explode. So again, we don't follow pattern trades, but you can see that it's winding up for a massive explosion here. Again, AAVE has done beautifully since our primary rising gradient bottom breakout. It's a monster. AAVE has been an absolute monster since that breakout, at over 200% against the US dollar in the last 30 days, basically. And Uniswap was another great opportunity to study the horizontal trading ranges. As you can see, these are the ranges we've been following since December. Sadly, I did not enter a play here, although I did start accumulating spot for this. This is a really beautiful horizontal trading range. And the other day here on the 1 hour, you can see that we also had another beautiful horizontal trading range around $8. And then from wick to spring, only 28%. So again, I wouldn't want to play with leverage in here. You can see again the failure rate of a potential of looking at I just want to point these out more and more often. When you're in a bull market, rising wedges are basically garbage, because they're invalidated instantly. So I want to make this clear, because someone Rasher, one of our admins, had shared this in the group, and I wanted to go over Uniswap here as well, because both AAVE and Uniswap could have been very deceiving if you thought that this rising wedge was a bearish indicator in a bull market, and it's not. This is not a bearish movement. This is just a temporary backup phase. And again, even more so with Uniswap here, where not only was it not a backup, not a breakdown point, it was an explosion point. So when you're in a trending bull market, you really want to be careful around people who pattern trade, because they can be invalidated at the drop of a dime. And it's not really worth being invalidated when you're looking that far. So we don't really use Elliott waves too often here. It's not all that important in my particular mind. At least I used to use Elliott waves a lot more. I think one of the most beneficial waves for looking for price targets, if you guys want, you can look at the point and figure charts in our private group that Baloo has been sharing. Those are extremely valuable. I have another way of getting to I think what ends up being very similar targets. And we can use that by using our Fibonacci extension tool in our forecast. So just because you've asked, we'll grab the Fibonacci extension or retracement tool. We go from usually our first SOS to the bottom of our spring here. We'll probably rip to around $22 It looks like we're going to get there pretty closely. It even looks like this was a fairly nice type of cup and handle moment. And again, the only reason we pattern trade here is if we're looking at an accumulation range. So first off, guys, if you ever hear someone talking about a cup and handle on the 4 hour, they're full of shit. They know nothing about trading. First off, keep that in mind. You want to be able to recognize the people that don't know what they're talking about because they can very easily deceive you. And again, the last thing you want to be is deceived in a bull market because it's like one of the easiest times to make money. So again, what we would do is we would actually draw a horizontal trading range within this pattern. We'd look at this as a part of the this LPS basically. There's your spring back in March. So this is actually how cup and handles are supposed to look. They should take many months to form. They should form throughout the trading range and then do this. This was a beautiful cup and handle. We had gone over that with DOT as well, just before DOT exploded. So for those of you that have been studying with us for quite some time, where's DOT? Boom. You'll remember that DOT performed the exact same horizontal trading. Was it DOT or band? May have been band. No, band was the inverse head and shoulders. Okay, it was DOT. Okay. Right. Okay. So here we go. This would be, we'll look at DOT just as a retrospective analysis. This to me, well, not as, why is this one? Oh, this is on Kraken now. That's why. Kraken didn't have anywhere near the clear volume that Binance did. So I'm going to have to reopen this up again. Another time. I'd have to go through, and I don't really want to right now. Again, guys, just be careful of pattern trades, basically, unless they're on long-term accumulation scales, because you can be very easily deceived. And the last thing you want is to exit a trade because someone said something's bearish. When it was 14 hours later, it's up again. So it's important. Again, this is why I think the rule of argument and being able to be very focused on your own study is so important, because that way you're not pushed around when someone says like, oh my God, Bitcoin's crashing, and it's gone down like 5% or something ridiculous. Anyways, guys, wow, I stayed up a little late last night. We were working on some music for fun. Okay, I guess we should have made today's video like something about XRP or Uniswaps exploding, because that probably would have garnered a bit more views. But I'm going to leave it at that. That's our full-time study for today. I really appreciate your guys' support. I'm going to take a look, just a few more your guys' questions, because it's so nice outside. I want to get back out into the jungle and go play. It's one of the fun things. Okay, let's take a look at some of your guys' thoughts and questions here. Nice. If Bitcoin drops to 19K, won't it pull ETH with it? That didn't happen in the bull market. Bitcoin had moved down and Ethereum had moved up. So there's no correlation between them as much anymore. Although, could that happen? Yeah, totally. Wall Street bets is bad for crypto. That's not true. What they do is they look for illiquid coins or illiquid products. So that's not bad. There's nothing wrong with moving markets. I actually think it's a great thing. But definitely don't find yourself in an XRP position for the long term. That's for damn sure. It is not a good investment. There's no fundamentals behind XRP. It's basically garbage. Same with Dogecoin. Although, again, guys, the other day, Dogecoin would have represented a fantastic short as well. Although I didn't take that short. I probably should have. Probably should have went short from Dogecoin here at 77 after I'd closed my long position. That would have been a great way to go. But again, you guys, you want to invest in not in fundamentals, but you want to invest in technology. Now, again, this is what I've gone over. Fundamentals don't matter for price movement. Hence, XRP is going up. Hence, Dogecoin went up. There's no fundamentals behind either of those, effectively, my opinion. But if you were in those trades or if you were in those positions, that'd be a good time to get out effectively and move to a more valuable long-term position. I try to stick by the pretty simple sentiment of play with the market leaders, Bitcoin, Ethereum, and Link. And Link's I can even turn into, like, it's one of our market leaders now, effectively. So don't neglect that. I think it's extremely important to recognize the difference between each of these from a tech, not just from a technical level, but from like how it operates within a portfolio. I think is very, very important. I'm going to jump off for today's episode. Yeah, I want to get back out into the jungle. Thank you guys all for joining us today. We're going to do a live stream every day. So if you're new to the show, hit subscribe, hit that little bell button. That way you'll be notified every time we go live. Also, remember to leave your thoughts, your comments, give us those likes and all those fun things. This is Teo with the Arcane Bear. Thank you guys all for joining us, and we'll see you again on the next episode. Bye.